Hello, everyone. I'm Matt Clark, research analyst for Money and Markets with our weekly marijuana market update. Remember, you can check out the marijuana market update each and every time we put one out on our YouTube channel. Just go to youtube.com, search Money and Markets. We'll be the one with the green logo. You really can't miss us. Don't forget to give us feedback. You can do that by emailing us at feedback@moneyandmarkets.com, or you can also leave a comment below in the comments section. We've got a lot of great feedback. I really do appreciate that. Now, today, I want to look at a smaller cannabis company that a couple of you have written into me about. In fact, Wayne recently posted on our YouTube channel, hey, what about HEXO? Well, that's a great question. I'm more than happy to dive into that for you. First, I'll start off with what the company is before I start getting into the financials and my analysis of it. HEXO Corp, which trades on the New York Stock Exchange under HEXO, is a Canadian-based producer, marketer, and seller of cannabis. It claims to be one of the largest licensed cannabis companies in Canada. It's got about 2 million square feet of facilities in both Ontario and Quebec. They've also established a processing and production distribution center in Greece as an effort to get a toehold in the Eurozone. We'll talk more about that in just a bit. The company operates in both adult use and medical cannabis spaces in Canada. It offers dried cannabis under its Time of Day and H2 brands, and cannabis oil mist, which I thought was kind of interesting, called Elixir. It also has a fine milled cannabis powder called Decarb. The company's been in operation since 2013. It's headquartered in Gatineau, Quebec, Canada, which is kind of situated nicely. It's right there in between some of the major hubs of Canada, meaning like Toronto, Montreal, and in that area. So it's actually pretty well positioned in terms of its distribution, its supply chain. Now, according to some research analysis, HEXO had about 33% market share in Quebec, which is Canada's second most populous province. For the first part of the year, though, the company has kind of struggled. It had the same kind of headwinds that Aurora Cannabis Incorporated suffered: overproduction. I talked about those headwinds in a previous video when I talked about Aurora Cannabis. You can check that out on our YouTube channel. Just make sure you click on that. You can find that pretty easily. In the first 9 months of fiscal 2020, the company sold about 25,000 kilograms of its product. The problem with that is it generally produces about 90,000 kilograms of product total. So if you look at that, you've got the first 9 months of the year. So you've got 3 quarters out of the way. They only sold 25,000 of a projected 90,000 production. That math really doesn't add up, and it leads to an overproduction. It also led to the company to write off about $100 million in goodwill, another $31 million in unsold inventory, and about $80 million in asset impairments back in January. However, the company has tried to turn some things around financially, which is good. Most cannabis companies are really striving to try to reach profitability, and HEXO is no different. One bright spot here that I found is that the company has about $79 million in total debt right now, and that's between convertible bonds, long-term debt. However, that's kind of offset by $81 million the company has in cash on hand. So it's not bad. You've got $79 million in debt, but you have $81 million in cash. It's always good when your cash outweighs your debt. That means in the event of a situation, you can pay off your debt. It very rarely happens, but you can do it. You put yourself in a good financial position to be able to do that. From my analysis, the company has a 1-year annual sales growth rate of about 103%, which really isn't bad. And those sales have steadily increased over the last 3 quarters. For example, in Q1 of 2020, the company reported sales of $11 million. In Q2, that was $13 million rather, and then $16 million in Q3, which is pretty impressive, but not too unexpected considering the several cannabis companies have seen sales increase during the coronavirus. However, it does come with some problems, and that is with its margins and its return-ons. Its return-ons are kind of ugly to look at. Its return on assets are negative 72.9%. The agriculture industry average is negative 41%. Its return on equity for HEXO is negative 82.5%. The industry average is negative 61%. Its return on investment, negative 77.3%. The agriculture industry average is about negative 45%. Its margins, well, they're even worse, actually. Gross margin for HEXO is negative 100, around 100%, a little over. The industry average is actually a positive 7.9%. Its net margin is a negative 623.7%. The industry average for agriculture, negative 265%. The operating margin for HEXO, negative 292.5%. The industry average, actually HEXO rates a little bit better here. The industry average for agriculture is negative 334%. It's a lot of red even for the cannabis industry. What's more, in 2019, the company's earnings per share dropped to minus 25 cents a share. That was down from a negative 13 cents per share the company reported back in 2018. And so far in 2020, the earnings surprises for HEXO have all been negative. And what that means is that Wall Street analysts will put out their projections. HEXO has actually fallen short in each of the last 4 quarters. Now, there are a few things that encourage me about HEXO, so it's not all doom and gloom. In April, it entered into a partnership with Molson Coors in the United States to research and potentially develop non-alcohol CBD beverages in Colorado. The partnership is called Trust CBD USA LLC. A lot of alphabet soup. The only drawback is that it's only operating in Colorado. It hasn't produced really any product yet, and it's not exploring any potential markets outside of the state of Colorado. So it's keeping things very confined within Colorado. I do also like the expansion into the Eurozone by establishing its facility in Greece. The company is operating about a 26,000 square foot greenhouse cultivation space to produce, market, and sell medical cannabis in Europe. While the Canadian market is still its bread and butter, expanding outside the provinces in a scaled fashion actually makes good business sense, even in this climate. Now, the price of a gram for adult use cannabis has dropped from $5.29 in April of 2019 to $3.19 in April of 2020. However, HEXO's sales, which you would expect would go up, did, and they went up massively. For the quarter ending April of 2019, they sold 2,759 grams of product. However, for the quarter ending in April of 2020, for the 3 quarters ending in April 2020, they sold 9,338 grams, which is a massive increase and is even more so than the drop in price. Again, with the drop in price, you would expect an increase in sales. That's obvious. However, HEXO has nearly tripled its sales as the price has gone down, and that's actually very, very good. Now, the company has also vastly cut its marketing and promotion spend from about $21,000 in April of 2019 to just around $9,000 for the 9 months ending in April of 2020. If you couple that with the higher sales in 2020, the cut to marketing really didn't have a huge impact on the bottom line outside of just trimming expenses. And cannabis companies are making a concerted effort to do that even as sales go up, because everyone's trying to be profitable. Everyone's trying to turn even a penny of profit in a quarter. And in order to do that, you can't just rely on either cutting expenses or raising revenue. You've got to do a combination of both. And HEXO is doing that. The company also just launched its Veryvell line of water-soluble cannabis extract drops in Canada. It's the first product offering of its kind with a partnership with Molson Coors Canada. Now, this is different than the partnership it has with Molson Coors USA in Colorado. So they've actually produced something here in Canada. They're looking to try to produce something with Molson Coors in the US. As for its share price, HEXO has seen a lot of lateral trading since June. In fact, its price has barely moved from between 60 to 70 cents per share since topping out at $1.09 back on June 8th. It's a pretty strong fall from grace for the company, considering it was trading at around $4 a share as early as late 2018. But despite the drop in share price, HEXO is only trading at 3.7 times its price to sales value and on 0.49 times its price to book value. So it's still a relatively valuable stock to buy in terms of its price. I am a bit concerned, though, about its lateral trading. As you know, myself and Chief Investment Strategist Adam O'Dell, we like to find stocks that are already in an uptrend, not ones that are perceived to be in an uptrend or some rare signal says it may come into an uptrend. We want to find one that is already in an uptrend that and that is backed by strong logic and strong fundamentals and technicals. And HEXO is just not there yet. It's inching up, but it's still trying to find that ceiling to break through. Now, does that make it a stock to stay away from? I don't think so. It's a small company and it's already in a volatile market. So some of that red ink I described, I can get past. And because it's trading laterally, a lot of that volatility is tending to stay a bit away from HEXO, which isn't bad. It's not providing an uptrend, but it's also not providing a huge downtrend either. I do like the company's scaled approach to expansion. They're not aiming for the moon when it comes to either the US or Europe. They're taking a very limited approach. In fact, you're limiting yourself to just Colorado and to maybe the Eurozone. So it is a very limited approach. I think what it seems like is that the company is hoping the market comes to them rather than them exploding onto the market themselves. I don't really have a problem with that kind of approach, especially with as many unknowns as we have in terms of the coronavirus and its economic impacts. We aren't out of the woods yet. Economies are still down. Unemployment is still high in places like the United States and parts of Europe. Lockdowns are still prevalent in areas of Europe. and even there's been some scale backs in Canada as well. So we're still not out of the woods in terms of that yet. So to go gangbusters out and to have a massive expansion somehow is probably not necessarily the smart idea, because you're putting all your eggs in one basket hoping for something to turn. What HEXO is doing is a very limited scale approach to expanding into the Eurozone, expanding into the US, and even expanding further into Canada. I like that approach. I like that, and I think that it will bode well for the company moving forward. Now, if you're asking if HEXO Corp is a cannabis stock to buy, I wouldn't necessarily dissuade you from doing it. Personally, I don't think it's a buy now. I'm still waiting for that uptrend. That's one of my big indicators that I like to look for is the company already trending higher? It is to a degree, but not very much. I think it will, and I think once it does, it's going to provide still a very attractive entry price point for investors to get into that still make it a good value. I would temper your expectations. The stock has struggled to find that breakout, even at times when other cannabis stocks did. This is one of those stocks that you would probably buy and hold for a longer period of time, say 2 to 3 years, to wait to see for legalization, to see if its expansion pays off, which I think it will. Now, in looking at Chief Investment Strategist Adam Odell's 6-factor green zone rating system, HEXO actually rates very, very low, as you would expect most cannabis companies do. It actually rates an 8 overall, meaning in the grand scheme of things, of all the stocks that we rate, roughly between 5,000 and 8,000 of them, we would stay away from it. But remember, this is cannabis. A big reason for that low score is momentum. And as I've talked about time and time again, HEXO has not really built up any of that upward trend momentum yet. When it does, you're going to see its score go up. But until then, while it trades sideways, you're not going to see that momentum score go up. It's got to build up steam for that to happen. It could change, and we'll have to wait and see if it does. It rates in the middle of all stocks rated in terms of size and value, which really isn't bad for a cannabis company, especially in terms of value. It's hard to find any stock that is really priced very valuable. A lot of stocks are overvalued because the market has continued to go up. However, HEXO remains a mid-range kind of neutral value. It's not high, it's not low, it's kind of right there in the middle. So while the company is facing pretty stiff headwinds to start the fiscal year, they seem to be trying to even some things out and get to some level of profitability. Is that going to happen anytime soon? Not this year, and maybe not next year. But I think if they continue to look at their expenses, continue to raise their revenue, look at a scaled approach to expansion, I think you could start to see HEXO become one of those cannabis companies that becomes profitable in the future. That's what I have on HEXO Corp. Hope you take that information to heart. Just for your information, I do want to let you know that I am in the process of adding a stock to my cannabis watch list. If you remember the 1st of November, I released 3 stocks that I put on the watch list. And what I'm going to do is every month I'm going to add a stock, or maybe 2, depends, to that watch list. These are stocks that are scoring very well, that I see very strong technicals and fundamentals for, and they're ones that you could consider putting in your portfolio. Right now, 2 of those 3 stocks, Perkin-Elmer Incorporated, trades on the New York Stock Exchange under PKI, and Schweitzer Malden International Incorporated, trades on the New York Stock Exchange under SWM, are both up more than 8% since I added them to the list just a few weeks ago. For the cannabis market, that's actually not bad, and I'll take that. So if you got in, congratulations on those gains. Stay in. I think we're going to see more good things from those companies. But again, I've got a company I've got my eye on. I really, really like it. It's got strong momentum. It's got strong technicals. It's got strong fundamentals. And I'm feeling really good about it. I just want to give it a couple days to see if any market volatility is going to cause any changes to it. But make sure you log into moneymarkets.com next week, and you'll see that when I put that stock up. Well, that stock or maybe another one that I put on my watch list, and I'll tell you why. And I may even talk about it a little bit on my marijuana market update next week as well. But you'll want to log into Money Markets. Just go ahead and visit Money Markets to get more information. So that's about all that I have total this week. I like to say, again, I love the feedback that I'm getting from all of you, whether it be on YouTube or by email. Again, just comment below in the comment section. Make sure that you are subscribed to our channel and that you have clicked the notification bell so that you get notified every time we put out a new video. If you do want to email some feedback, if you have a comment, a question, maybe a stock that you'd like me to look at, or if you're still looking at answering my question on why you're interested in cannabis stocks, make sure you email us. Feedback@moneyandmarkets.com is the email address you want to hit up. Very simple. You can write something as few as a line or 2, or you can write a novel. Doesn't matter. I'm going to read it all anyway. I read all the feedback that I get. And I love what I've been getting from you guys so far. It seems like everyone has a lot of great reasons for why they're invested in cannabis. And that really helps my team and I look for content that we can add to make that even better, make that experience for you even better. If you're interested in listening to the Marijuana Market Update before anyone else, like I said, just subscribe to our YouTube channel and then click that notification bell so that you get it about a day or so before it comes out on moneymarkets.com. That way, if there's any actionable information that you need, you want to take action on maybe HEXO Corp or something like that, you're going to get the video a day before anyone else on Money Markets does. So make sure, again, subscribe down below and then hit the notification bell. I do have a goal. I'd like to get 10,000 subscribers by the end of the year. Getting very, very close to that. So would love and appreciate any help you have to get us over that line. The same goes for our Bull and the Bear podcast, our week ahead video. My team and I are meeting on a regular basis. In fact, we're meeting later this week, and we're going to talk about other videos that we can put out that might provide you more safe and profitable information for your investments. So until next week, I appreciate all the time that you've given us, and we'll have much, much more coming up. Bull and the Bear podcast twice, and our week ahead coming up on the weekend. So until next time, I'm Matt Clark, research analyst for Money Markets and the host of the Bull and the Bear podcast. Hope everyone has safe trading.